Now, I believe there's free money in the market right now. I'm talking about us just walking right on over and just picking it up off the floor, okay? That's the opportunity that I'm looking at right now. Now, in all seriousness, obviously, every opportunity in the market comes with risk. There's risk in this one, but I feel like out of everything else that you can play right now in the market, this is what you want to be looking at, okay? This is the trade that it's worth throwing a few coins at. Not your whole portfolio, but a portion of it. And I'm going to explain my reasoning behind it and the math behind it. Now, it's about GameStop. So, quick thing, we all know there was a massive short squeeze of GameStop many years ago. There's also a massive community still till this day on Reddit that is still hype about the stock. They still believe that there's going to be another short squeeze at some point in the future that's going to be even greater. And there's pretty much a cult following behind it that's always going to support the stock. And I think that is actually giving us an arbitrage opportunity, in particular with warrants that were issued by GameStop about a year ago. October 7, 2025. Let me make myself a little smaller here. GameStop issued these warrants that expire this October. The expiration date should be here somewhere, but they expire this October, the 30th, 2026, with a $32 strike price. These warrants were given to all shareholders on October 6th, 2025. Now, we are now 2 months away from the expiration of these warrants. And obviously, as time has gone by, the warrants have begun to trade lower, and lower, especially since it is connected to a $32 strike price. And GameStop right now is nowhere near $32. If I look on the side right now, GameStop is trading at $18.09, which is pretty much the lows for the last year or two. With it, the warrants have traded lower, obviously, too. But here's the thing. They should be way lower than what they currently are. They should not be trading for $1.07 with 2 months to go on a strike that's at $32 while the stock price is at $18. If we even look at just the relative performance here in the last month, is this exactly the last month? Almost. Let me just back it up a little bit more. This is exactly a month ago. GameStop is down 15% in the last month. I'll make myself even smaller here. 15% in the last month. The warrants are barely down. And again, the warrants are expiring. There's an expiration date tied to them. The stock is not. You could hold that stock forever. The warrants you cannot, but the warrants are showing more resilience than the stock itself. And why is that? Well, it's because you have this demand for the warrants. It's because you have all the followers of GameStop on Superstonk, the Reddit, buying up the warrants, believing that that is where the opportunity lies. And maybe it did, but not at these prices. And we're going to be looking at these prices. So for starters, to not bury the lead too much, I have a long short position opened up. I am short the warrants, the October 30, 2026 warrants, $32 calls. I'm short about, if we throw this into the P&L, about $4,300 worth of those warrants I am now short. You can see what the average fill price is. That fill price does include commissions. I'm long the September 17, 2027, $32 calls. The market value of $2,800. This, if I could, would be an October expiration, but there's no October chain for 2027, so I chose a September 17. So it's not 12 months past this expiration, it's only 11 months. But notice a big difference in price, right? I was able to sell the warrants at pretty much 1.7 and buy the $32 calls, which expire 11 months later for pretty much 50 cents cheaper, 47 cents cheaper. And these expire 11 months down the line, and they trade for so much less than these do. Now, that might seem like a crazy opportunity, right? Like, why would the market even do that? How can the warrants that expire, how can the options that expire 11 months later trade way cheaper than the ones that expire in 2 months from now? Well, it's because of this language right here. The fact that they can extend the expiration date of the warrants, and they could even change the strike price. So they could even move that strike price closer, because keep in mind it's a $32 strike. So if they were to move the warrant strike closer to, let's say, 25, 24, it would move up the value of the warrant. So they can do that. That's why this trade is not exactly free money, because of the optionality of them being able to do that. I mean, it's in their filing here that they can do that, right? Now, at the same time, they do have this other filing, which basically says that if you do not sell or exercise your warrants, you could always exercise them way below strike price, as you could have any option. If you do not sell or exercise your warrants by this, your warrants will expire worthless. They say it a couple times here, to please remember to set reminders for this expiration date. You don't miss the opportunity to exercise. GameStop will also issue at least one public press release providing a reminder between 10 to 30 days prior to the scheduled expiration date. Now, that's also important, because we're going to find out what's going to happen with these warrants pretty soon, because October 30th, pulled 30 days before that, that's okay, September 30th, right? So that's kind of the earliest we might find out. We might find out if they just send out a reminder, press release, reminder, hey, these are going to expire, these warrants are going to crash in value. How do those reminders look like? Well, here's your GM issuing a reminder on warrant expiration. Here's Expand Energy. I think this used to be Chesapeake Bay. Actually, this is not the right article, but they also issued a press release reminding people that it's going to expire. Wells Fargo, reminder, expiration. And again, they all also had the same optionality of extending the warrants if they wanted to, moving the strike price if they wanted to, and so on. But they didn't. They just let them expire. As GameStop also warns that can very easily happen, and they may send a reminder out, which can very much look like this. But the market apparently doesn't care about that. Lovers of GameStop don't care about that, because they've priced in the fact that it will get extended. Because as we've seen here, these warrants are trading for 1.7, and these calls are trading for 1.13. Now, I made it a little easier for us on this notepad for us to kind of look at here. Currently, the $32 calls for October 16th, this is the closest I can go to match up the warrants that expire. If I match the two of them up, the current warrants, the current options are trading for 17 cents. 17 cents. While our warrants are trading for $1.70. Okay? That means that 90% of the value of the current warrant is baking in assumptions of what GameStop will do with the warrant. 90% of its value. 10% is properly ascribed, but 90% is just based on assumptions. These are the ones that I have been going long myself to hedge, right? The September 17th, as you see, instead of 110, I did it for 114 and change. I was doing this before I put my positions on, an hour ago or so. If we even go to January 21st of 2028, those are trading for 155. They're still trading less for what the warrants are trading for. We have to go all the way to June 16, 2028. All the way out there to finally get prices of 195. So let's think about this for a second. If GameStop were to come out right now and they were to extend the current warrants all the way to June 16, 2028, so let's say that's what, like a year and a half extension, you would stand to make like 10-15% on your warrants. Your warrants would pretty much go up in value by that much, everything being in a vacuum, if they were to extend it by a year and a half. If let's say they extended it for 1 year, and they would have to also bring the strike price down to $26 for the warrant price to then match the option price. So again, we're basing on the fact that there's a lot of assumptions being baked into the current warrant. So I'm trying to figure out, what do those assumptions look like? Well, to be break even, if you're someone that's holding these warrants, GameStop has to raise the price, extend for 1 year, and drop the strike price to $26. That is going to justify the current price that it's trading at. In a better case scenario, if they extended it to June 16, 2028, right? So a year and a half out, and they also adjusted the strike price to $26, then it should be trading at around $2.90. That's what you're going to be looking at. So what is that, like a 50%? Well, 50%, I don't know, probably between, say, 60, 70% return on your money, if that were to happen. That's the best case scenario on how they can move things around. Now, the reason why I have to hedge all of this, by the way, is because GameStop could absolutely have an eruption over the next 2 months. I mean, for no explainable reason, and that's what these calls are here for, right? I'm holding these calls that are 11 months out from here because yes, if anything, actually, I would prefer to see GameStop go up, believe it or not, because if GameStop goes up from here, the value of my calls go up in value. And while the warrants will go up in value, they risk collapsing the moment there is some clarification as to what happens with them. Because if GameStop rallies, let's say to $24, $25, these calls are going to be looking pretty. I might be up 100% on these calls, 200% on these calls, if not more, probably way more. And if that took, let's say, a month to happen, and then we get a press release that the warrants are not going to be extended, well, these warrants are probably going to drop to like 50 cents in value, 40 cents in value if GameStop is trading at, say, $24, maybe even less. So I've got a lot of profit sitting on these warrants now because I'm short the warrants, and I still have all my profit on my calls. So I actually benefit from GameStop going up. That's why this actually works pretty well for me, where I'm able to put in a bullish position on GameStop, and I'm almost financing it with these warrants because these warrants have priced in so much positivity as to what could happen with them. And to surpass the assumptions, it's very, very difficult. It requires much further expiration push, and it requires bringing down the strike price by quite a bit. And that could happen. That's why this is not free money. That could happen. Maybe Ryan Cohen comes out, extends it for 5 years. An extension of 5 years would definitely make warrants be worth more than $2.90, right? I haven't even run the math on that, but they'd probably be worth $5, $6, $7. So yeah, if you're buying these warrants at 1.7, you'd be up triple your money, quadruple your money. That's also where your risk is, by the way, in this type of trade, which is why you want to keep it small, right? If I'm risking $4,300 in this position and somehow these warrants are worth double because they did decide to extend for 2 years and they decided to drop the strike price by a lot, then I might be down, $8,600 in the position. And by them doing that, it actually may not necessarily help my call position out. You would think so, possibly by them doing it, there would be some hype of the stock and the stock would get pushed up, which would increase my call value, which would hedge those losses. But I can't really count on it. I can't count on that happening at all. But that is where my risk lies. My risk lies in them extending the expiration date or dropping the strike price by a lot more than what the market is assuming. And this is already with the market assuming quite a bit. If these warrants were trading for like 50 cents right now, 40 cents, it made sense. It would make sense at that point to take that bet that maybe there would be an extension. But it's trading super rich because I feel like at some point, a lot of retail investors are looking at these warrants and they're like, well, it's a no-brainer. Of course, they're going to extend, but they actually haven't taken the moment to actually see what's already priced in and actually see, in comparison to options, like how expensive are these warrants, and they're super expensive. Again, paying $170 is already paying for an option where 90% of its value is already based on a lot of positive assumptions regarding the expiration date of these warrants. If they were trading for like 10, 20 cents, 30 cents, I get it. Take a gamble. Take a gamble on buying the warrants and hope for an extension, but not at 170. 170, the bus has left the station. That is it. That is, everything's been priced into that and more at this point in time. And I still see people on Reddit and on Twitter still talking about buying up warrants because seemingly to them it looks very cheap. It's $1.07. You know, and maybe it's going to double, whatever it might be. Very often these people are not option buyers. You know, sometimes the option chain looks very intimidating and they never want to mess with it, but the warrants are kind of very simplistic. They got warrants from their brokerage. It's sitting in their account. They could probably just right click and click buy to buy more of it. They don't have to look at expiration dates. They don't have to look at strike prices, which may seem very intimidating. So for them, it's simple. It's like, well, look how cheap these warrants are. It's $1.70 a pop. I just deposited $100. Let me buy some more of them, you know, without realizing that at this point, it's a super overpriced option. But this is my position, and I'll continue to monitor it. It's going to be interesting as we approach September, how it begins to price, and I might build this position up even larger. I'm happy with how it is right now, but I might still build it up. Again, just really depends on what the spread is in between it, but it's going to be a fun trade to kind of monitor and see. Now, if you found this video helpful, if you have any questions for me, let me know in the comments below. Hopefully, this proved to be an interesting video for some of you. Like for more content such as this one, subscribe if you haven't yet. Other than that, thank you so much for watching. Till next time.